In this video, I'll cover three things. Firstly, how a 60-minute signal bar affects today's price action. Two, how I use these signals to position myself in the next potential swing direction. And three, a step-by-step drill that you can practice in your own trading right away. Hi, everyone, and welcome back to another simple daily practice drill that I think you can do to improve your trading. And this one is called 60-minute signal bars live. So let's go and check it out. So today we're focusing on the 60-minute chart and how it impacts the 5-minute chart. Now, this is something I use in my trading every day, and I believe it really helps me on trading range days. And that's when price is confusing on the open, doesn't seem to be going anywhere, and it's hovering around a price that the market thinks important. But a lot of the time, we don't know what it is or why it's important. And I believe the 60-minute chart can really help us. Now, in a previous video, I talked about how to use the 60-minute chart during the day, but this video is going to be in your pre-session, how to use it before you come in. I'll put a link to the video in the description below. I've also got a playlist I'm putting together on 60-minute videos that I think will be very valuable. So what I've noticed in my trading is that when a 60-minute signal bar is still live, it impacts the price action. For example, if there's a good bull signal bar on the 60-minute chart that gets triggered, we go above the close, we go above the high of that bar, then no matter what the bears do, when they come back to that entry price, they just can't seem to get people to sell there. And from what I've noticed, that's because the 60-minute bar has 12 times the volume. And so those traders that are using that time frame are more than happy to buy at that price. Traders that bought small now have a chance to add to their position, and traders who missed out on it now have a chance to enter. And on the other side, bears who faded that signal bar had to scale in higher, and now they have a chance to get out of it break even. You can see there's a lot of activity at that price. Now you can take this concept and use it on any higher time frame, daily, weekly, monthly, even the yearly. All that matters is that the time frame is higher than the one you trade, and I think by a factor of 3 or 4 seems to work well. Drill instructions. So what are the instructions for this drill? I'm firstly going to take you through the instructions as a set, and then I'm going to go and demonstrate it on a chart. I want you to pull up that 60-minute chart, and I want you to put an arrow underneath all the signal bars that are still live. And that means price has not gone below the low of those bull bars. So if a trader could have put a stop right below that bar and it hasn't been hit, in my view, that bar is live. And I want you to put an arrow, I use a blue arrow, to show that these are all the signal bars for the bulls that are still live coming into the open. Step 2 is to then use a measured move tool or a Fibonacci tool to measure a 1-to-1 or 2-to-1 from either the close of that bar or the high of that bull bar to see where potential targets are. And step 3 is, if that bar has already reached a 2-to-1 target, then that bar has finished, in my view, because any trader that took it has a great risk reward, and they're probably going to close that trade. Step 4 is the last signal bar that got 2-to-1. I want you to keep that measured move tool there. So you're going to have that range split into thirds. And this is often the trading range that we open in. So let's jump into some charts. So on my screen, I've got trading view. I've got 2 charts. I've got the 60-minute chart from the RTH session and the 5-minute chart from the RTH session. So firstly, where are bull bars where we didn't go below the low? Went below the low of that, below that. Okay, didn't go below the low of that, didn't go below the low of that. So these are all the bull bars that we haven't gone below the low of. Now what I'm going to do is I'm going to use control to snap. So from this arrow here, we can see if you bought above that bar, you did get 1-to-1. What about this bar down here? Let's make it red so it's a bit easier to see. So if you bought the close of this bar here, you could have got 2-to-1. If you used just the signal bar from the close or above the high, you definitely got 2-to-1. So what I'm going to do is I'm actually going to delete that bar because that bar's already gotten paid. You bought that, you got your 2R. What about buying this bar? Well, that's a higher low there probably. So if you bought this signal bar, at least if you bought the close, then that was okay. You got 2R. If you bought one tick above the high of that bar, you got 1-to-1 as well. Okay, so that's interesting. So I think these guys got paid. What happens if you buy that bar? Well, say you put a stop down there. Okay, so you didn't get 1-to-1 if you used that stop. You didn't get 1-to-1. So you could only have bought the close. You couldn't have bought one tick above the high because we didn't trade above there on the next bar. Okay, let's say you just bought the close, put a stop below, nearly had your stop run. There's your 1-to-1. But they got a close up there. So I'm going to leave them in. Now, as you keep going up these signals, people are going to start getting less and less of a chance to get paid. So if you bought the close of that bar, you couldn't get paid 1-to-1. If you bought the above the high, you didn't get 1-to-1. Could you have at least got half R? Yeah, you could have got half R on that bar. Okay. I don't think you can buy the close of this one. Breakout, pullback, high one. Yeah, breakout, pullback, high one, high two. I think that's probably where you need to stop marking up signals. So now we've marked up live signals from yesterday on the 60-minute chart, and we've left arrows for the ones that might not have been paid yet and they might still be live. And the ones that have already gotten paid or have had a chance to get a swing profit, we're going to remove them. So what I'm going to do is I've drawn lines around this bar. Now, there's no way to know if they're buying the close, buying above, buying below. I can't tell that. What I can do is look at that bar and say, what would be a reasonable trade? What would be a reasonable trader's equation? Well, buying the close or buying above is reasonable. Probably need to scale in because the stop's wide, and probably better with a smaller position because you're at the top of something at the moment. So you get a chance to add on. Now, as we come into the session, let's see what happens. So coming into the session, the first thing that happens is that we dip below that signal bar. And that's important because if you bought the high of a bull bar and we go below that bar, then you're going to have to take action. Particularly if you know a channel, there are traders that are going to buy below that bar. So you take a small position here, and then you're happy for it to come down, you take another small position. Now, if I put a fib across there, if it was a buy the close situation, that's where the fib would be. If it was a buy one tick above the high, that's where that would be. So they're going to be the two lines, which will be the two midpoints from those entries. Now, what do you notice about the first couple of hours? We've been oscillating around this price, and we have not gotten back to the high of that bar. Now, this is a bit of an issue. If I buy a bull bar and I'm looking to scale in, and we go below that bar, so I buy more, but we never get back up to my earlier entry, at some point I've got to give up on that trade. And there's a couple of ways I can do this. One is I can wait till we get back to the midpoint and then exit. So I'll take a small loss on the first, a small profit on the second, and it's neutral. The other alternative is to continue to scale in to try and make your money back. But I'm not recommending this on that video. So at this point, traders who got long, they bought lower, they had a chance to get out break even. But the problem with getting out break even here is at this point, you think we're going to go up and close that gap, or at least I did yesterday. I thought, yeah, fair enough. Big open gap. There's no sell signal on the RTH chart. So it's a trading range. We went back down to the bottom of that bar, and now we've come up. And this is where I switched to getting short yesterday, because I thought to myself, okay, I think I know what's going on. Traders bought and bought lower, and they wanted to get back to the high of that bar, but this is disappointing. Now we get back up here. I'm looking for a sell signal. That's not a sell signal. That's not a sell signal. That's not one either. Now we've got a sell signal. We've got a potential double top, but I think it would be difficult for most traders to take this double top. It's a tight trading range. These 60-minute traders are done. They've had two chances to get back up to the high of the bar. They've had two chances to scale in below the low of that bar. If it was very urgent, the market would not have done that. It would have just kept going up. And that means we're probably going below that bar again. And so I do not want to be long here anymore. You can also see on the 60-minute chart, we've had two dojis. So either the market is going to trade above that bar. That was the opportunity to trade above the bar. And what happens? No one was there. So at this point, it's now a sell and scale in lower. So for me, that was the turning point on the day, because that was when all the 60-minute traders left. So you can see on that example, even though the trading range price action was a little bit difficult, if you stayed concentrated on what the higher time frame was doing, you had a chance to catch a really big swing yesterday. Now, I didn't predict we get an opening range measured move down and go all the way down to the low of that daily bar. But the point is, the swing's the swing. That's the entry. You don't know where it's going to go, but it's a reasonable entry. And I think the 60-minute chart is a great way to find those. Hey, thanks very much for watching. I hope you find this drill valuable, and I really encourage you to practice this before you come into the session. Thanks very much for watching. My name is Tim Fairweather from Zen Trading Tech, and I'll see you in the next video.